Hello, my name is Jane Fang. I am a real estate investor and real estate broker. I specialize in residential investments and commercial real estate. Today, I'm going to talk about lifetime capital gains exemption. The reason I want to cover this topic was I was talking with a few business owners who were childcare centers and they were thinking of selling their business. And I realized that not everyone knows about the lifetime capital gains exemption, which can save up to 50% tax. But of course, you have to talk to your accountant. Um, Disclaimer, I'm not an accountant, so if you have any detailed questions, please ask your accountant. The purpose of this video and this blog is just to let you know the existence of this thing, right? The lifetime capital gains exemption, so that you can ask your accountant and plan for it when you are planning to sell your business. If you're interested to buy and sell commercial real estate or investment properties, please feel free to reach out. My email is jc8fung@gmail.com. My phone number and website is here. I would really appreciate it if you like and subscribe to my YouTube channel. I hope that all these videos that I'm recording, I could at least help one person to know a little bit more about real estate or anything related to it. Okay, so today we're going to talk about the lifetime capital gains exemption. And let me give you an example to start so that you can understand what I'm talking about. Let's pretend that you're a business owner who has been operating a corporations for a while. Corporation can be anything. It could be a store, it could be a retail store, it could be an online store, it could be a childcare centers, it could be a school, it can be anything that is running a business and making money. And well, okay, even not making money, you can still have a business. um Time later, maybe you're planning to retire, you don't want to run the business anymore, then you may consider selling the shares of the business to other people. And as you sell the shares, you make money. Those could become your capital gain. In this situation, you may be eligible to claim the lifetime capital gains exemption. So we are going to go through briefly what is a lifetime capital gains exemption. This could potentially save up to 50% tax. The lifetime capital gain exemption, which the short name is LCGE, for qualified small business corporation shares, QSBCS. Okay, so the lifetime capital gains exemption for 2022 is $913,630. And the deduction limit is 50%, which is about $450,000. So it means that you have a deduction limit of about 450K. So let's pretend that if your corporation is sold for, $900,000, then the potential capital gains deduction that you can save would be $450,000. And what is a qualified small business corporation share? So you have to be a qualified small business corporation share. What it means is the share has to belong to you, your spouse, or common law partner, or a partnership of which you are a member at the time of selling. And it has to be a share of a small business corporation. I don't know if you remember when you first created your business a long time ago, you have an article of incorporations. Within the article of incorporations, there are things that you defined. You will have the number of shares. You will have the shares privilege, or what each shareholder class can do, right? For example, you might have common shares that can vote and stuff. You might have preferred shares that you cannot vote, but nonetheless, the article of incorporation would define the number of shares. And then in your minute book, you would have defined who own these shares. Okay, in your registry, you would have defined who own these shares. So the owner of these shares is what we're talking about here, right? It has to be you, your spouse, your common law partner, or the partnership that you're a member of. Okay. And if you're confused, you might want to consult your accountant or lawyer regarding, the share ownerships, which they might have helped you define back many years ago. Okay, throughout the 24 months before the share was disposed, the corporation has to be a Canadian-controlled private corporation. What it means is it cannot be a public corporation. Public means that it's IPO already, meaning that you can have a stock exchange to buy and sell the shares. So that is called a public. And we need it to be a private corporation and Canadian control. Okay, what is Canadian control private corporation? It means that you cannot have non-Canadian residents to be in the corporation. I believe the percentage is 50%, but we should double check with the CRA website. Okay, and 50% of the corporation must be used to carry business in Canada. Okay, no one other than you, the partnership you're in, or the person related to you should own the share within the 24 months before the share was disposed. So pretty much what we are saying is, if you are a Canadian citizen resident and you own the company, say 100%, and you operate 100% of the business in Canada, you are likely qualified to be the small business corporation shares. Okay. And there are also other eligibility. You have to be a resident of Canada throughout the years of which you're claiming the deduction. Okay. Or there are other criteria in CRA that will also consider you as residents, which you can, consult with your accountant or from the CRA website. This is it for the presentation. So thank you very much. And if you have any questions, feel free to contact me and I can help you with any commercial or residential investment real estate. Thank you very much.